Hi, Assalamualaikum. We are from Group 3. We'll be presenting financial analysis for 7-Eleven. This is our group members. The first one is NURIZWANI, BINTI, SADIQAH, AQILAH and SHUKRI.
Hi, my name is Shukri and I will explain about the background of company. 7-Eleven is an American multinational chain of retail convenience store. J.C. Thompson established the business in Dallas, Texas as the Southland Ice Company in 1927 and then started an ice vendor and converted to the modern convenient retail concept. The first convenient outlet known as 2M stores. In 1946, 2M changed their name to the 7-Eleven to reflect the new business stores. After that, in 1999, the Southland Corporation Company changed their name to 7-Eleven Incorporation. 7-Eleven was a pioneer and the largest 24-hour convenience in Malaysia. 7-Eleven was incorporated on 4 June 1984 and has made its marks in the retailing scene and has been a prominent icon for over 28 years. 7-Eleven Malaysia is the single largest convenience store chain with more than 2,400 stores nationwide, serving over 900,000 customers daily.
Next, we will be presenting SWOT analysis. Assalamualaikum, my name is SADIQAH binti RAHMAT and I will be presenting SWOT analysis. The first one in SWOT analysis is strength. As for 7-Eleven, the first strength is convenient location. 7-Eleven is a 24 hours convenience store which has about 18,000 outlets around the world. 7-Eleven has a significant location and convenient advantage, and it has greater market coverage through a greater number of outlets will provide increased convenience to more consumers. The second one is individually branded products. Most famous products are the Slurpee and the Big Cup. 7-Eleven also provide further strength to 7-Eleven, which give opportunity to consumers choose to seek out these particular products as their preferred choice. The next one in SWOT analysis is weaknesses. First, it has high rental cost. 7-Eleven face higher rental cost due to the requirement to locate the 7-Eleven outlet in very convenient locations. 7-Eleven need to adopt a premium approach. Second, it has unlimited goods. The amount and variety of goods are limited compared to large supermarkets. The commodities mainly focus on convenience and are not suitable for large quantities of household goods.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurizwani and I will present the next slide. Next is opportunities. In opportunities, we have increasing product. There would be physical capacity in many 7-Eleven outlets to expand the product variety and offerings. This can opens up the possibility of offering a wider range of physical and digital products, while also offering services such as ATMs, cell phone card, and possible even vehicle insurance. Besides that, 7-Eleven has obviously enlarged its product to include ATMs, coffee, pastries, pizza, sandwich, and other items in several regions. Second, we have exclusive product, which is 7-Eleven has developed solid ties with process skills with well-known brands. Gatorade is an example of this, with various tastes available solely at 7-Eleven outlets. This is advantageous to both commercial alliance, and also it will increase the range of benefits that 7-Eleven provides to its customer. Next is threat. Under threat, we have increasing competition. There are many competitors in this industry. In addition to the same type of convenience store like Family Mart, Speedmart, big supermarkets such as Lotus as well as Aeon. Family Mart is a major competitors for this company, which is they're offering ready-to-eat food in their store. Other than that, there are many convenience stores opening nearby 7-Eleven, which may lead to high competition in the respective areas, since many customers have to choose in choosing which convenience store to purchase the products. Second, 7E have numerous robbery cases. It is because of they are open for 24 hours. 7-Eleven is a convenience store that handle cash and may be open on a 24/7 basis. It is always likely to be a target for thief and armed hold up. Obviously, the change has put in various security measures in different parts of the world, including video cameras, safe as well as window barriers, and so on. 7-Eleven will have the continued trade of minor shoplifting and stealing. In some locations, these stores operate on a lean budget and only have minimal staff, which presents the opportunity for some consumers to occasionally shoplift. Nowadays, many stores have operate a 24-hour system, and this can destroy the 7-Eleven competitive advantage.
Let's proceed to second part, which is vertical analysis. Vertical analysis came out with comprehensive income and also statement of financial position. My name is Nurbaiti Emalin with HANISMAN. I will cover the analysis on the statement of comprehensive income. First, cost of sale. Okay, so the cost of sales was 68.53% of total sales in 2018, but it started to increase to 68.64% in 2019 and then 71.57% in 2020. A significant loss in gross profit results from such a rise. In order to raise gross and net profits in 2021, 7-Eleven will need to lower its cost of sales while attempting to increase or maintain the total sales. Second, the profit from operation. It shows that an increasing performance from 2018 to 2019, where the percentage increased from 3.77% to 5.09%. Meanwhile, from 2019 to 2020, the profit from operation declined by a percentage point from 5.09% to 4.64%. It demonstrates that 7-Eleven does not conduct their business efficiently enough to transform revenues into earnings. In general, the company's profit is declining because of the COVID-19. Okay, so I think that's all from me. I will pass to the AQILAH for the analysis on the statement of profit or loss. Thank you.
Thank you, Binti. My name is AQILAH binti Mohamad SHUKRI, and I will proceed with the vertical analysis on statement of financial position. So firstly, property, plant and equipment. From 2018 to 2020, the percentage of PPE are slightly decreased. There are changes in accounting principles for asset leases from MFRS 117 to MFRS 16 in 2019. The modified retrospective method of adoption was used to adopt MFRS 16 with an initial application date of 1 January 2019. Under this method, the standard is applied retrospectively with the cumulative effect of initially applying the standard recognized at the date of initial application. Let's proceed with the intangible asset. Since an accumulated amortization of computer software of 16,632,000 ringgit, the percentage of intangible assets decreased from 4.58% to 2.07% in 2019 and increased significantly, rising from 2.07% to 20.89% in the year 2020. A new intangible asset was recognized, namely dealership rights and trademark. It is a positive sign when the amount of non-current assets has increased from 2018 to 2019, since it aids management and investors in determining a company's ability to employ resources and generate earnings. I will pass to the next presenter.
Next, we have efficiency ratio. Under efficiency ratio, we have account receivable turnover, inventory turnover, and fixed asset turnover.
First, we look under account receivable turnover. This ratio is to measure how many times a business can collect its average accounts receivable during the year. This will show the efficiency of the businesses in collecting their receivable. A higher ratio is more favorable for this ratio. As we can see, in 2018, 7-Eleven managed to collect that from their account receivable 21 times per year. While in 2019, 7-Eleven has increased the collection of its average account receivable during the year 26 times, while there are slightly drop in 2020 from 26 times to 25 times. Therefore, it can conclude that 7-Eleven is efficient in collecting their receivable, since they show some positive trend from 2018 until 2019, even though there is a slight drop in 2020, but 7-Eleven still can keep the number in average. Second, we have inventory turnover. Inventory turnover ratio shows how many times a company's inventory has sold and replaced over a period. A low turnover implies poor sales and excess inventory, when a high ratio implies strong sales or ineffective buying. So based on the graph, it shows a slight decrease from 2018 to 2019, which is from 6 times to 4 times. This is because 7-Eleven has excess inventory stock available, which they failed to convert into sales. Luckily, there will be a significant increase from 2019 to 2020, which is from 4 times per year to 7 times per year. This shows that 7-Eleven has done well in converting their inventory into sales, since their revenue also increasing from 1,606,671 to 1,81714 in a year. We have fixed asset turnover. Fixed asset turnover ratio is to measure a company's ability to generate net sales from its fixed asset investment, which is property, plant, and equipment. A higher ratio is more favorable and more efficient in utilizing its fixed asset to generate revenue. Based on the ratio, we can see that in 2018, 7-Eleven managed to generate revenue RM6.58 for every RM1 invested in fixed assets. Unfortunately, there will be a huge decrease in 2019, which is from RM6.58 Malaysia to RM3.36 and keep decreasing in 2020, where 7-Eleven only can generate a revenue RM2 for every RM1 invested in fixed assets. It shows that in every investment in fixed assets, 7-Eleven is not efficient in utilizing its fixed assets, since it shows that have decreasing trend in 3 years. In conclusion, the highest ratio shows only in 2018, meaning that in 2018, 7-Eleven is more favorable and efficient in utilizing its fixed asset to generate revenue.
Okay, next, profitability ratio. I will explain 3 ratio, which are net profit margin, return on asset, and return on total equity. First, net profit margin, the formula we use, net income divided by net sales, which is to measure how the net income is generated as a percentage of the revenue. Second, return on assets. The formula we use, net income divided by average total asset, to indicate how profitable a company is in relation to its total assets. Last, return on total equity. The formula is net income minus preferred dividends divided by average common equity. So it is to measure how well a company uses its investment to generate profits. First, let's see the term for the net profit margin. For net profit margin, the higher margin is always better than the lower margin, because the company can translate more of its sales into earning at the end of the period. As you can see here, 7-Eleven net profit margin has decreased significantly from 2.32% in 2018 to 2.29% in 2019 and continued drop to 1.39% in 2020. The sales of 7-Eleven were reduced due to the pandemic of COVID-19. COVID-19 caused drastic change in the external environment and had various effects on the business of the retail industry like 7-Eleven. Next, for the return on asset ratio. Based on the analysis, we found that the return on assets for 7-Eleven has decreased drastically from 2018 to 2020, which are 6.64% and then 4.98% and 2.04% respectively. Lastly, the return on equity ratio. As you can see here, the return on total equity of during 2018 is the most efficient, which is 61.65%. It shows that the company used the money from shareholders to generate profit and grow it because it is a higher ratio than in 2019, which is 55.59%. But different in 2020, the company became inefficient since the ratio dropped to 26.85%. What I can say, the sales may be decreased due to the pandemic COVID-19, and some of company assets are being revalued and deficits.
Thank you, Shukirah. Now I will continue by explaining the leverage ratio. There are 3 ratios that will be presented, which are debt ratio, debt to equity ratio, and times interest earned. So firstly, debt ratio. A debt ratio measures the amount of leverage used by a company in terms of total debt to total assets. It is to measure the ability of a company to pay its debts. The higher the ratio, the greater risk will be associated with the firm's operation. So next, debt to equity ratio. Debt to equity ratio refers to the riskiness of a company's structure by comparing its total debt to its total equity. High risk of debt to equity ratio describes that the company's financial potential growth by borrowing. And lastly, time interest earned. Time interest earned describes the measurement of the amount income of a company that can be used to cover the interest expense. If the time interest earned is low, it will be risky for the company because they might not be able to afford to pay its interest obligations, and it will indicate bankruptcy. So now I will present the debt ratio of 7-Eleven. The formula is total liabilities of the company divided by its total assets. Based on the result, 7-Eleven had fluctuated trend between 2018 and 2020. In 2018, they had lower debt ratio, which is 87.66%, and the ratio increased to 92.82% in 2019. However, the debt ratio slightly reduced in the next year to 92.08%. This can conclude that 7-Eleven slowly reduced the risk by lowering the debt ratio. The debt-to-equity ratio of 7-Eleven. The ratio can be expressed with the formula total liabilities of the company divided by its total equity. Based on the result, in 2019, the debt-to-equity ratio for 7-Eleven increased drastically from 2018, which is 7.1 to 12.93. This might be risky for the lenders and investors. However, the debt-to-equity ratio getting lower in 2020. Let's proceed to the last part, which is time interest earned. The ratio is calculated by dividing earnings before interest, tax, depreciation and amortization or EBITDA with interest expense. The result shows that the time interest earned for 7-Eleven is decreasing from 2018 to 2020, which are 8.45 times, 2.76 times, and 2.17 times respectively. This can conclude that 7-Eleven might not afford to pay its additional interest. Thank you. I will pass to the next presenter.
Thank you, Aqilah. My name is Nurbaiti Emalin. I will cover the next part, which is liquidity ratio. In this part, I will focus to explain three types of liquidity ratio, consists of current ratio, working capital, and also asset test ratio. So, what is liquidity ratio? Liquidity ratio is to measure a company's ability to pay debt obligation and its margin of safety. First, current ratio. The formula for current ratio is current asset divided by current liabilities. Okay, so the graph shows that the current ratio for 7-Eleven in 2018 is 0.61 and decreased to 0.54 in 2019 and increased back to 0.63 in 2020. It shows that the 7-Eleven current ratio is below than 1 for 3 years. So it means that a current ratio below than 1 means that the company doesn't have enough liquid asset to cover its short-term liabilities. Second liquidity ratio is working capital. Working capital is the difference between a company's current asset and its current liabilities. Based on the graph, it shows that the working capital for 7-Eleven show the negative value from 2018 until 2020. Negative working capital occurs when the company has more current liabilities than the current assets. It indicates that the company may have incurred a large cash outlay or a substantial increase in its accounts payable as a result of a large purchase of products and services from its vendors. Last but not least, for liquidity ratio is asset test ratio. The formula for asset test ratio is current asset minus inventories and divided by current liabilities. Asset test ratio for 2018 is 0.22 times, slightly increasing to 0.23 times in 2019 and keep increasing to 0.31 in 2020. It represents a positive trend. However, the company with an asset test ratio less than 1 do not have enough liquid assets to pay their current liabilities and should be treated with caution. Thus, it means that 7-Eleven's current assets are highly dependent on inventory because the asset test ratio is much lower than current ratio. So, I think that's all from me. I will pass to the next presenter.
Lastly, I will be presenting market ratio. The first one is earning per share. The amount of income earned on a share of common stock during an accounting period that require disclosure for corporate income statement. Earning per share for recurring items are significant for primary analysis. The next one is dividend per share. Amount of dividend credited to each individual share of a company's outstanding stock. An investor can calculate the dividend per share to see how much income he or she will earn from the company on a per share basis. And lastly is dividend yield. It indicates the relationship between the dividend per common share and the market price per common share. The yield depends on a firm's dividend policy and market price. The first one is earning per share. The formula is net income minus preferred dividends and divided by average outstanding share. Based on the analysis, we found that the earning per share had increased from 4.57 cent in 2018 to 4.74 cent in 2019, but then drastically decreased to 2.6 cent in 2020. The next one is dividend per share. The formula is total dividend paid divided by shares outstanding. Based on the analysis, we found that the dividend per share had decreased from 0.03 cent in 2018 to 0.02 cent in 2019 and remained the same in 2020. Lastly is dividend yield. The formula is dividend per share divided by earning per share. Based on the analysis, we found that the dividend yield had decreased from 1.80% in 2018 to 1.65% in 2019, but then it increased to 1.69% in 2020.
Lastly, I will explain the short-term future prospect that can 7-Eleven use to improve the company business. What we can say that the company performance of 7-Eleven was declining due to the COVID-19 pandemic that impacted all over the world. In order to improve the company performance in future, 7-Eleven need to implement few immediate plans in order to get back on track and keep good image in the future. First, the managing business need to be ready for various business strategies in order to survive in current economic environment. So they need to restructure their business strategies to remain relevant in the market. Besides, their finance manager needs to be more alert in managing their debt. Based on liquidity ratio, it shows that the company do not have enough money to pay back their debt since 2018 to 2020. In order to have more cash stability, 7-Eleven may discuss with the bank to restructure loan term by extending payment term. By having a longer period of time, 7-Eleven will have enough cash to pay their debt. Since their product is homogeneous, they need to compete with other retail shops and other supermarkets nearby. They need to have a proper strategy to attract the customer, either by giving weekly discount, introducing customer loyalty program, and so on. All in all, in 2022 and 2023, we are expecting 7-Eleven to execute their recovery plan in combating the post-effect of COVID-19 towards their business. From some research of article, more fresh food product will be launched by 7-Eleven Malaysia in order to expand the gross profit margin of the company. We strongly believe that 7-Eleven Malaysia will continue to improve its convenience proposition for customers.
All from us. Thank you.